Hello, my dear friends. I don't know, you can tell by the sound of my voice, but I'm smiling ear to ear. It's good to be back. Man, life is, I think it's known. We grow in contrast. Me and my kids went out some fishing. I did some on location translation or streaming on location, I guess from a different spot, from my mobile, so to speak, studio. Everything went okay. I kind of checked it out in the previous video, but it is good to be home. And I got my big monitors in front of me. I'm talking to some of my favorite people. Hopefully, some of you will be coming back and asking questions, comments, concerns. We'll answer everything one on one, even if you have the desire to get full answers. You want financial independence? You want to live from anywhere in the world and make money? You're on the right channel. You're talking to the Morpheus, where I'm going to give you guys the red pill and bring the truth about trading. Yes, it's possible to make money. Yes, it's risky. That's why we're doing these videos, to make sure that you guys understand everything that's involved based on logic, math, statistics, and not luck. Luck is excluded from our conversations. So, as usual, as I mentioned, today we're going to be talking, and this week we're going to be talking about. My man Henry is in the house. Thank you, my dear man, for such a loyal patronage, I guess. And so appreciate you being with me yet again. Today, guys, today, my friends, we're going to be explaining, we're going to be talking about support and resistance levels. This is something that, God, I would say universal, right? Where somebody might, you can't really argue the importance of support and resistance levels because it's applicable to everything, right? One of our videos, we kind of touch based on, and Donald's in the house. Appreciate my dear friends, appreciate you guys hanging out with me. So yeah, today we're going to be talking about support and resistance. The reason why it's universal, because it's something that kind of like directly reflects the supply and demand principles, right? Everybody understands that the market is driven by two emotions. It is fear of losing money, so essentially fear, and it's kind of an ugly word, but I do still think that it's important. It's greed, right? Or desire to make money. So desire to make money, fear of losing it, that's what drives investors to buy and sell, and essentially what creates price action. Right now, as I mentioned, in a few videos in the past as well, I kind of keep touching back on these very important points. But if you buy a shirt at $5 and you think that it's a great deal, and you're like, you know what, I don't know, maybe it's autographed by Jordan, and you understand that if somebody is going to be buying it at like $2,000, you'll be like, hell yeah, I'm going to sell it, or maybe not. Essentially, maybe it's a you're a basketball fan, and maybe this is something you want to keep. But the point is that at some point the price is too good to keep, right, of something, so you're going to be selling it. Or the other way around, to buy, right? If you were looking to buy for Bitcoin, you're like, oh man, it's like 115,000 right now. Well, you know what? If it drops down to like 80, it might prompt you to, buy, and once again affect the supply and demand principles. So let's let's kind of hop to it. Let's switch scenes. Oh God, I love my big monitors. Or bigger monitors, that I guess. All right, let's see. All right, so technical analysis with regards to support and resistance levels. All right, what is support and resistance level? Support, it's a level under the asset, right? So when it falls to a particular point, it's, you know what, funny enough, my wife, I always, we're confusing these. My wife said, just think of like a bra. It does its supports against gravity, right? So if the asset is falling down, support line is something that's going to be going across the bottom of the asset, right? And resistance is kind of like a glass ceiling. It resists growth, right? Resists growth, like a career growth, perhaps. right? So, but this is why we're doing this. We don't care about, say, working for Uncle Bob. We want to work for ourselves at our own pace, at our own schedule, and this is why we're doing this right. So, resistance is the line that's established that goes across the top. And support, it's a line that is, essentially reaches across the bottom. Now, the thing is that it's not, well, I wouldn't say that it's an exact science, right? So, and there are certainly different ways of, kind of calibrating this, but most traders will will set a support and resistance across the bodies of the candles, right? So anytime you essentially see a 2-point contact, right? So let's kind of see if we can, I don't know what, we're on euro dollar OTC. All right, so I don't know, let's assume that we've seen this point right here. It started to go up, then it came down to this point, and it started to go up. Already, this is a 2-point contact. It's not something that is an established support level. But basically, anytime you see a 2-point contact, all you got to do is go whoosh and extend this line. That's all that really is. Now, the third time it touches it, this becomes a level of interest. It becomes actually a kind of like a confirmed level of support. And, the line needs to be touched 3 or more times to be a confirmed level of support or resistance. That's very important to understand. All right, and on the, like, if it touches 3 times, that's it. It's a kind of like confirmed level of support and resistance. The 4th time it comes to it, it becomes a point of interest, because if it bounces back, the chances are it's going to continue to bounce back. But if it breaks through, it is a breakout strategy, right? So there's like two essential possibilities. See, in this case, the bulls have the momentum, right? Bulls are the ones that are charging upwards. Bears are sleeping, so essentially hibernating, going downwards. That's where, the bulls and the bears maybe, comes from. But the idea is that bulls, it's a bullish market. It's the one that rises. And bearish market is the one that falls. But we understand that the bulls have the initiative here, the momentum, right? And at some point, we already have like a very nice well-established level of support. So it touched once, it touched twice, it kind of came close. I mean, this really doesn't really count as like a 3rd-point contact, but it came close enough, right? So this is, some actually traders will do this. They'll actually create a, like a parallel channel, and they'll give it a little bit of, freeway, kind of like a movement. Let's see, they create a channel, and say, hey, you know what, within these lines, right, if it touches, oh, well, kind of touched, right, we can adjust this a little bit like this. There we go. So this would be like a couple of points, a couple of pips difference between, kind of support and resistance here, but creating a channel. And if it breaks through this channel now, right, if we're going to count this as 1, 2, 3, 4-point contact, essentially was, I don't know, I'm not really a big fan of that. I really do like it when the asset actually touches, right? And it's done across the bodies of the candles, right? So you don't really want to, put it across the wick. I don't know, really. We can come up with different examples. I'll actually go back in history, or maybe go through some different assets here to set up support and resistance. But the idea is that we're kind of monitoring the change in momentum. Right, so in this case, this is like a really wide channel, right? And we understand that right now it's going sideways, but technically, even if it goes sideways like this, it's going to start saw a particular level, but it will come to this point at some point in like 15 minutes, is going to come to this level of support. And if it bounces away, it has, kind of higher likelihood to continue to bounce away, or, which in my opinion more likely, it's going to break through. And if it does break through, chances are it's going to go down for quite some time, right? So we're changing, we've got like 1-minute candles here, but we're looking at change in inertia, change in, kind of momentum. because, after every move upwards, there tends to be a retracement. Move upwards, a retracement. So, there's never going to be just green candles. Something, oh God, I don't know, something super drastic has to happen for the asset to be moving up non-stop for a long period of time, right? Because we understand what is a retracement, right? If somebody opened the position here, right, and let's say that the euro dollar is like $1.10, right? In forex, the pip is the fourth digit, and well, I don't know, the formula is a little bit complicated, I guess, but we could still, I don't know, maybe we could still touch base on this right now. Um, Basically, it's it's a division. It's a division of the lot based, on the pip, and well, you multiply. Anyways, you know what? Let me go through, the ideas that if the asset is, we already done the calculation here. If the asset is at the moment euro dollar is $1.10, the asset itself, the pip is going to be like $9. All right. So if every pip is like $9, let's round it up to 10, right? Around right now is we got like $1.12 of euro of every dollar per euro. For €1, it's $1.12. And essentially the fourth digit after the decimal we got here 1232, right? And if we kind of look over here on the right, it's 1251. So essentially 20 pips. 20 pip movement. If somebody opened a position here, 20 pips later, they would actually make, essentially $200, right, on the standard lot, right, on the standard lot, which is 100,000 units. Now, if that happens, they'll be like, what, 200 bucks is pretty good. I don't know, and at that point, they're going to be selling, right, or essentially closing the position. But closing means that you are selling, affecting the supply and demand principles. And that's why there is basically a retracement of somebody cashing out. Right? As simple as that. Somebody is cashing out anytime there is a retracement. Why do they do that? Because, well, essentially, why do they do that? Because, the money is good and it allows other people to come in at a better price. Right? Somebody buying here would have to pay, maybe a little higher premium, but at a retracement, right, they're buying at a better price. And when they buy, there tends to be, again, a push upwards. Somebody that opened here at like 1243, at this point right here, 7 pips later, $70 on a standard lot. Maybe that's not a lot. Maybe that is enough for you. There is a retracement. So, anyways, but imagine if somebody opened the position here, 05, and 67 pips later, $670 in Forex would have been opened here. You would have made, at this point, somewhere around here at the highest peak at the, of this asset for the past like hour and a half. So opening a standard lot, you understand that after this movement, there might be a really, higher likelihood that there's going to be a sell. You can see that the asset is, kind of sawing a particular level. And there is higher likelihood that when it's going to touch this support level, that it's going to break out and it's going to continue to go down. So, anyways, let's kind of once again touch base on the formula to find out the pip. Right, so on euro dollar, on any major currency pair, which usually major currency pairs usually include the dollar, it's usually the fourth digit, right? Unless it's like USD JPY. JPY, it's a third digit, the pip. Right, but basically, if you take 0.0001 and you divide it by the price, right? So whether it's 112 or 110, and then you multiply that by the volume, which in standard lots is 100,000. Right, so 0.0001 divided by the price, which, say 110, 112, 113, that number you multiply by, if it's standard lot, 100,000. If it's mini lot, it's by 10,000. If it's micro lot, it's by 1,000. And that's the value of one pip, right? Which in this case is the fourth digit. And essentially you can calculate, hey, you know what, in Forex, if I would have opened the position here at 1217, at somewhere here at 1251, 51 minus 17, we're looking at like 34 pips. You know, 300, let's say, you know, $10, $340 worth of profit in Forex, which means at this point somebody would have been saying, hey, you know what, I think it's good enough. I'm going to cash out. Boom. At this point, they cash out, and here they buy at a better price, pushing it upwards. Again, closing, maybe not a big profit, but nevertheless, this is why there was a bit of a tug and pull here. So, all right, so this is why this is actually universal. I love the fact that support and resistance levels are applicable everywhere. Everywhere. You cannot, you know, I cannot live without this. You know. So what we understand is that 1, 2, possibly 3, but definitely 3-point contact. On the 4th point, even though if it's not going down, even if it's going to go sideways and touch this level right here, this is the point of interest, which means that if it breaks through, chances are, well, and this is where we need to monitor our other indicators to understand what kind of momentum is behind, you know, or at this level. For like lagging indicators, we got, you know, basically, you know, a lot of choices, you know, from fractal to moving averages, you know, alligator. We are able to see maybe like the inertia, right? If we look at ADX, this is something that I was talking about previous videos, which ones are trending indicators, right? The ones that are showing you the strength of trend, you know, if it's moving upwards, if it's got like momentum, right? Right now, CCI is pointing that says that it should be going upwards, right? If it touches the positive 100 line, kind of like they did right here, you know, we understand that there is like serious inertia, and we know we could expect a slightly higher upward movement. If it touches the bottom line, you know, the opposites. We're expecting a couple of red candles. And so simple as, you know, simple as it gets, you know, it touches, you expect that it's going to go up. Here it's kind of sawing this level. I really like it when it does something like this, where it goes, you know, up right here, green, boom, at the end of the candle, you got it. You're in the money. You know, here it goes back down. Here, you know, once again, the next candle, or, you know, the same candle, you should be in the money. Boom, right? So it goes in waves. This is something, I like this kind of volatility. You know, here, boom, it goes down. You know, obviously you can see red. Here, signal, boom. You know, by the end of the candle or even to the next one, should have been in the money. I don't know. It kind of touched right here. You know, I would have sold, but, you know, it depends on if you got the flag or the timer. Would have been a determining factor if you would have made money here. If it's by the end of the candle, kind of like you know, the way I like to trade. Not something that I'm pushing on anybody. Timer is there for a reason. Right, so maybe you got better statistic if it's 60 seconds later. Here, same thing, right? So it wasn't really as clear cut, but the essential point is that, you know, this is kind of like a trending indicator, kind of tells you when you know, there might be enough inertia to continue to go into one direction or the other. And right now, oh, see, there we go. It's retracing, and you know, here was a sell. So on this candle, there was a sell signal from CCI. But I gotta tell you that with ADX, which shows the strength of trend, it's actually at like 10%. I don't see any trend because look, it actually is below, let's see, below, I would say right about here, right about in this point, it drops below 20%. So right about here, the indicator like ADX, average directional index, calculated that there's not really a trend. You can see that it's actually going sideways, just like ridiculous flat market. As we kept, you know, mentioning in the past videos, you can look, you know, as well through that in the history on the channel. But we are understanding that leading indicators like CCI or maybe a few, I don't know, plethora others, a shaft, a rune, bears, bulls, accelerator, basically a demarker, the leading indicators, they tell you where the market might be going. Right now, ADX is showing me absolute you know, kind of indecisive information about any momentum strength. Right, so this is actually saying, man, this is like dirt. I mean, there's absolutely no gas in this tank. For euro dollar OTC, it's like moving absolutely nowhere, just sideways. And it's confirming this right here. There is not really a rise, right, with the, you know, like in this case, turquoise, but the ADX line, signal line, is the orange one from default settings. right? So essentially, when it rises above 20% with a particular line, you kind of got to, understanding that there's going to be continuation. So, right, we're looking at support and resistance levels. We are able to, let's see, do we have fractal here? We don't have fractal, right? Let's choose fractal. Where is it? There it is, right? There it is. All right, so you are able to kind of notice that anytime it touches the level, on top and there's like a signal, maybe delayed signal nevertheless, but these are your signals for a retracement. Anytime it touches here, red candles, right, or candles, red arrows are the signals. They're delayed. They're actually going to be happening on the following candle. They show you that on this candle right here, on the red one, it showed you that, hey, it might be a good time to buy. And you can see 1, 2, 8, hey, wait a second, it bounced away. Chances are it's going to continue to bounce away, and so it did. Right, sideways because somebody made money here or somebody opened here, they made money here, they retraced. Somebody bought at this point, made some money here, it retraced, but once again, it continued. So we've established a channel of support and resistance, and we have to monitor different indicators at those points to understand whether, oh no, we did have fractal, there it is, right? All right, I hit it, I didn't see it. All right, so what we've got another possibility, well, kind of like a situation here where several pips, right? Just like here, several pips or so, it didn't reach this level and it continued to go upwards. But what we need to also understand is that no trend can go on forever. That's why we're looking at support and resistance levels where the asset might be breaking out, right? So this big long movement upwards is now meeting a particular resistance, right? So hence the word resistance, right? It's resisting this particular level. And with this situation right here, it's actually called a false breakout. What this means is that if on one candle it breaks out, technically that would have been a signal to buy. But on the following candle, it came right back under this level, right? So if we say 1, 2, 3 point contact on which is an established, essentially, level of resistance, let's make it a little fatter. And essentially, when it broke out and closed above, I got to be honest, I would have bought, right? If we got like maybe, there we go, we got actually another confirmation from Parabolic saying, hey, it's going to be going up, right? If we take a look at indicators like CCI, here it also said, hey, it's going to be going up. But as you can see, the hour, because it's OTC, pocket option clients, or somebody that might have been moving, some money emotionally, maybe a lot of people, it swayed the supply and demand principles and it went back in. So it doesn't mean that it's nullified, that it's not a good line of resistance. It is. It is still a good line because now we have 1, 2, 3, and this does count as a 4th point contact. So I got to tell you that, from what I've noticed right now, this long, I mean, how long has it been, right? It's been since like 1340, and right now it's 1625, right? So we're talking about several hours worth of movement here. It's been going upwards, right? But now it's meeting a resistance. So kind of like this level right here. It's been going up, but now it's sawing, albeit a bit longer, this particular before bouncing away. So, but it is an established level of support. 1, 2, we could sort of count this as 3, but definitely 3. And there it is. All right, so now we got, this maybe is a little bit too pricey, but you know what? I am going to take a position on this till the end of the candle. I'm going to sell on this one. Let's see, we got 40 seconds, right? 46 seconds or so left. I do believe that, next couple of minutes there should be a breakout, unless this is going to be like a false breakout where it kind of goes down and then comes back in. I'm going to wait for the second step martingale, or my money management is going to wait until it kind of squeezes a little bit more, because look how long it's been going up, and actually not really a short time, for about like over half an hour now. It's being squeezed. It's going sideways, right? So between upward movement, it's being squeezed from the top, And I think I'm going to take the next minute, right? The next 10 seconds, I think I might win or lose this one. Not sure, but you know what? Even if I lose, I'm still going to open the position for a downward movement. All right, so I'm in the money. Let's kind of open another one because I do believe that it's still going to go down. Why are we doing that? Look, long movement upwards. Imagine somebody opened the position here and, I don't know, 2 hours went to take a nap. So somewhere now here, they're like, what? What's going on? Oh, I've made like $300-400. I'm going to be selling it. So it broke through this level. We got confirming signals from a trending indicator like CCI that it should be going down, from parabolic, and the fact that it finally broke through the level of support. That's essentially what it is. So now I would expect, now it's kind of going down very quickly, which also might mean that there could be a bit of a pullback before continuing downward, if that's going to be the case. So after this position, if it's going to close in the money or not, I'm probably going to wait until a confirmation. Look, 1, 2, 3. Hold on, let this, okay, 1, 2, 3, 4, 5, 6 red candles in a row. You don't, okay, so here we had 5 before there was a pullback. Here we have 4 before there was a pullback. 1, 2, 3, 4, 5 pullback. Right, so historically speaking, I would expect that there would be a green candle, at least, just a little bit of a pullback here, before perhaps continuing to go down further. Look at the chart. Look at what kind of movements we're expecting. Right, 1, 2, 3, 1, 2, 3, 7. 7 candles over here were before there was a pullback. So, and you know what? I'm not a prophet, really. I can't see the future, but this is just the experience, talking. And yeah, as I mentioned, I think that this candle will close a little bit higher before it, could continue to go down further. So we do have the benefit of support and resistance is that they show us the points of interest, right? The point where the momentum might shift, right? And imagine this. If we calculate, right, how many this was actually like a really good. I think I've had some videos of parabolic SAR 2.0. Another way, some people trade on parabolic only during the switch off the asset from the bottom to top. So here they sell, here they buy, but they wait until it switches again. Boom, it switched, so they sell right here. So they do that, but understand something. If you ride the trend, right, there's a reason why it says trend is your friend, right? There's a reason for that. When you ride the trend, I mean, imagine if you open the position for every single minute, from here, right? So here it says buy. Essentially, well, actually, wait a second. Here it says sell, in the money, out of money, in the money, out, out, out. Oh, wow, look, out, out, out. So this was actually 6 steps. Very rare does this happen, but look, actually, if you open till the end of the candle, you would have lost 6 steps in a row. But anyways, okay, so this is not really, that's why we don't trade just with one indicator. But let's assume, right, you traded, so here, in the money, in the money, in money, in money. 1, 2, 3. On the 4th step, you would have been in the money, so still, in the green. In the money, in the money, in the money. Here in the money. Here you would have lost. 2 would have lost. 3 you would have lost. On the 4th one, you would have sold, made money. So if you ride the trend, if you pick a point, or like, hey, this is a bounce, there should be, a whole bunch of, upward movement, and you open the position on every single candle, with proper money management, you could hit your target in like 15 minutes. All right, so if your target is like 10% and you open 1% of your balance into each position, that's it. 15 minutes, you've done your 10%. 15 minutes. 15 position, whether you win on the 2nd, on the 3rd, or on the 4th step martingale, you've done your 10%. Now imagine, 10% per day will turn 1,000 into $17,500. That's staggering to me. Nowhere else. Where else are you going to get this kind of return on investment? It's crazy awesome. And the beautiful thing about Pocket is that they pay out. Usually people sometimes will complain, oh, they take a couple of days or, whatever. Yeah, it's an international company. They got to make sure that the money is not laundering something or cleaning, washing certain dirty deeds. But, if you're a, stand-up citizen of whatever country, it's no problem. You are going to get your money. You're going to get paid. And that's essentially what the point of support and resistance levels, where we are able to assess if the asset has been going up for a very long time. Chances are at some point there's going to be a reversal, right? Because people are going to start cashing out. And when they're going to cash out, somebody's going to, essentially see a trend, and they're going to ride that trend. They're going to go short on particular assets, and they're still going to be making money on the downward movement. So let's actually see. So now that this level is broken and is going down, you see, there we go. Somebody opened the position here. They made enough money here. They've closed. There was a retracement, but the fact is that this negative trend will probably continue. And what we have now, let's maybe start a different resistance level. So I would say that while it's below this line, it should continue. So now we have essentially a 1, a 2, and a third point contact, and I still believe that it should, there might be a false breakout and continue, but I think that it should still go down minimum to around this or this level, because here it also kind of sawed at this price level, right? So at this level we have, let's see if we can copy that, right? At this level, we have also 3 or 4 point contact now, but here it was a resistance level. See, 1, 2, 3, 4, and it broke through. When it breaks through, hello, it's a breakout strategy. We'll go more into more examples about this tomorrow or in the following couple of days. I gotta check my schedule, but yeah, there it is. Bum, 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 bum. It went up a little bit. Somebody cashed out some money here, and bum, 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 it went up more. But at this point, see it, they used it as a point of as a support level, as something to bounce off of. And if it's going to continue to go down in the next minute, it's also going to feel that, squeeze, right, between this level. If it reaches it again, it might become a level of interest, a second point contact, but we'll see. So right now, CCI still says that it's kind of like down, parabolic says bottom heavy. CCI is kind of going back in. So, I don't know, maybe we can take a look at ADX, right, just for a quickie. It's still at 17, 17%, 19% about that. So, I don't know, maybe there's a building of a or like a negative movement. You know what, if we can always do certain, like, adjustments in the settings to make sure that it's a little bit more evident, or, I don't know, friendly to the eye. There we go. So it goes up with the red line. I mean, yeah, you got a bullish or bearish dominance. But as I mentioned, right, it's about 17, 19%. So there's not really a trend yet. So there we go. All right. So it broke through on the third point. It's not really something that is trend friendly. Right. So it's not this particular level is not an established level of resistance until it's touched 3 times. So that's why we might readjust this to see if, maybe in this case, we are looking at something like this being a 2-point contact. When this candle closes, if it bounces back down, we'll be extra vigilant when it goes here. But we got parabolic SAR on the bottom. We got CCI kind of pointing upwards. So I don't know. We got some conflicting signals at the moment. So perhaps we are looking at, maybe different, you are able to make your own conclusions or make different trend lines. I would say that, something like this was here as a support level. I would say, me personally, that I would have taken the top of this as well into consideration, as like I did. And now that this channel has been broken, I'm looking for different, right, support and resistance levels where other traders might find a good time to open the position. So, I don't know, this is not really a big enough, bounce back, because, well, it kind of looks like it actually broke through on the third point, which is not really a good, a good sign of a good support, or in this case resistance level. So I might say still that now we have these two levels. You see it's still being pinched between this somewhat sideways down movement with a very aggressive upward movement. So now we're looking at other indicators. We don't see a trend, but we do see CCI reaching. We do see parabolic. And you know what? Let's take this position. Let's take this position till the end of the minute for $10. So if it breaks through it, there is a chance that it's going to have a second false breakout. But CCI is touching. We don't have a trend, which means that I could be seeing, we could be seeing a particular retracement in the next 20 seconds. See, it's actually, I don't know, for our platform, it says that it is bearish dominant, that there might be a lot of people opening position for a downward movement, but we don't know if it's for the next 15 seconds, 30 seconds, or 5 minutes. All right, so, but when it breaks out, right, we got essentially like 1, 2, 3, on the fourth time it broke out, chances are that it's going to continue to go upwards for at least a couple of candles. And at this moment, I would say that while it's above this line, it's going to continue to go above this, it's going to continue to go up. There's going to be more green candles than red. All right, so I love the fact that this, and as I mentioned, we can choose any asset. I don't know if Donald or Henry can, maybe choose an asset in OTC or a real market. You know what? Let's actually go to the real market. I want to show you if there, this is something that is also quite not Fibonacci. Hold on. Let's erase this. So this is something that's going to be going on in the next couple of this week. I'm going to talk about this as well. But let's see if we can jot down a few levels. All right, we got 1, we got 2, we got 3, we got 4, and on the 5th time it broke through, and yes, it went upwards a bit higher. Though here we got kind of like mixed results, right? There was an upward rise above 20 with the red from about this point right here. We understand that it's bearish dominant, but when it broke out kind of aggressive, but then it went for retracement. Okay, so let's continue. All right, we do have also a, maybe a good support level. All right, so we do have a bit of a channel here, as you can see, right? 1, 2, 3, 4. Well, no, see, this is what I was talking about regarding the wick. You don't really count this because it's not really a body of the candle, but some people do. I don't know. So if this falls into your statistics and based on, once again, logic, math, and statistics, if you manage to kind of do these things right, God be with you. Excellent. Keep doing it. All right, so when it breaks out, technically that's it. Resistance levels in this case is no longer valid. So now we're looking at a top move, right? And we're looking for when it's going to break out. So we have a 1-point contact. We got a 2-point contact. I don't know, a little weak. I don't know, maybe we could adjust it a little bit. It's not an exact science. It's not something that's like, 1 pip accurate. Right, but we got 1, we got 2. Some of you might count this is a 3rd point because it kind of touched and then it bounced up. And on the 4th time, if you choose to count it that way, there was a breakout. And once again, within that minute, if you opened the position somewhere here till the end of the minute, you would have closed in the money. So if that's no longer, right, in this case, this support level is no longer valid, which means that now we're looking at resistance levels. So, I wouldn't call this a really good resistance because it's not really enough kind of information for a contact. But when it broke through, it continued to go upwards. 1, 2, well, on the 3rd time it broke through. So once again, we do want to keep an eye out as a 3rd point contact. But if it touches and bounces away, yes, we got a good level of resistance or support. But if it at this point it shows that there's going to be a breakout, Actually, I don't see any indication of this across the all of the other indicators. I don't know. ADX is showing a weak. There's not really a trend here. It didn't really show a reversal. Parabolic is still showing upward movement, even when it broke through here. So I don't know. 1, 2, and that's why you really don't want to do these things on the third time. So you want 3-point contact, and on the fourth or fifth or further, the more times it touches, the sexier that support or resistance level becomes. All right, so when it broke through, because as I mentioned, we don't really count this kind of uh signaling, but there we go. We got a 1, we got a 2, we got a 3, we got a 4, and then we got actually a 5. And on the 6th time it broke through, there's a beautiful continuation. And this is in the real market, as I mentioned, right? So we can, I can show you these potentials, right? Quite a, for quite a while. Let's see. Here we might have, well, we got like a false breakout, perhaps. A possibility. For a resistance level, I definitely would have started somewhere here, but, because we got 1, there's a downward movement 2, there's a downward movement 3. I don't know, let's actually set it up kind of like that. As I mentioned, it's not an exact science. You put it across the bodies. We got 1, we got 2, 3. On the 4th one, it kind of touched, bounced away. On the 4th one, broke through. All right, so at this point, there's a nice upward channel at, that is here. There it is. 1, 2, 3, 4, 5, possibly 6, and on the 7th one, it broke through. All right, so when it breaks through, that's when the support or resistance level becomes null. And then you're looking for maybe a quick reversal, or if there is, you're looking at other indicators that show you a big possibility for a reversal trend, and you could ride that trend. So you're either doing this during the quick reversals within the trend, or you're riding the entire trend. So, the signals, for example, for parabolic, when it switches, right? So we got a signal to buy here, got a signal to sell here, buy here in the money, sell here at the end of the candle in the money. But you're looking at time factor as well. 1450, right here, 1450. The next signal you would have gotten is 7 minutes later. The next signal you would have gotten, wait, what the hell was it? There we go, 1457. This one is 1502, also like 5 minutes later. So you actually have to sit in front of the computer for like an hour to get like 10 signals. Actually, in my case, maybe even more, right? So let's say 3 o'clock. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Right? And 11 happened at 16. So hour and a half. Hour and a half of sitting in front of a computer to get like 11 signals. Is this good enough for you? Maybe. Kind of like me, I sit in front of a computer all day. I can play my PlayStation 5, chill out. My wife and kids are out of the house. And I can keep an eye out on certain patterns, which we are going to cover as well. On certain signals that are coming up, just keep an eye out on them. And when the signal comes, I just, pause my gameplay. I get here, I open the position in the money, great. Not, I elevate the investment, and I go play again. I understand that I'm still going to make money within like 3 or 4 signals because I understand how to be patient enough, to essentially come out on top anyway. And so this is actually it, my dear friends. You know what? I think that, I don't know what time we got. Yeah, we're pretty much coming to an end. I see my usual guys are in here. Henry, Donald, I appreciate you guys all the time. We do talk on Telegram as well. If you want to have a one-on-one conversation with me, without any fluff, without any negativity, I'm not here to sell a trick. I'm here to clarify. Me and my team are here to make you understand that, listen, this is an instrument that if you use well, you are quite capable of making money. But if you're unaware of how to do this right, well, chances are you're going to end up kind of hurt. All right, so please ask questions. get answers. Nobody's ever going to, I don't know, belittle you or make fun of you for asking questions about basic things, the fundamentals. I'm going to clarify it. So join our Telegram channel without any kind of pressure. It's here for, kind of like an open community. But you do have me and my team to get the answers to you, to help you live anywhere in the world at your own comfort level, where you're going to understand what kind of risk you're taking, what kind of profit to expect, and what kind of signals to get. This is so diverse. This is so subjective. That's why I cannot tell you, do what I do. But you know what? I don't chase millions. If I make like 3-4 grand per month of just chilling here, while playing my game, spending time with my kids, being in nature, driving around wherever the hell I want, that's good enough for me. I'm not looking for millions. Millions usually means that you're, kind of have to risk big. I don't like risking big. That's why I'm not asking you to do what I do. But I do want to clarify how you can achieve your goals specifically. And this is why it's done, one-on-one, live contact. I would appreciate any kind of comments below the video about the topic. I don't know about anything else really. Cars, girls, I'm your guy. So touch base, hit that subscribe button. Super happy and excited to talk to any and every one of you. And appreciate your time. And I'll see you guys tomorrow.